Ewan Gilfillan, welcome back to the Speaking of Steel studio. You're here to give us another marketing minutes summary, which is sort of drawn from our regular monthly reviews. This month, we're going to be looking at raw materials, and you've been, as you always do, exploring the trends there. Thanks for joining us.
Yeah, thanks for having me. I'm doing great, and looking forward to be back in the hot seat.
Great stuff. Well, a nice sort of quick summary for everyone. I guess we'll kick off with iron ore and coking coal. What have been the key market trends in recent weeks?
So, broadly speaking, we're talking about raw materials. Raw material costs have broadly come down this year. And so if we're talking about iron ore, we're talking about iron ore being sent to China. They were trading about $140 per ton. Now they're about between $100 and $110. If we're talking about coking coal, we're talking about Australian origin coking coal delivered FOB to an Australian port. That was trading above $300, and now it's around $200. So that's been a quite dramatic, downward trend throughout most of the year. The reasons for that are many. Particularly the effect of the steel market in China. China has a huge influence on pricing, particularly for an iron ore. It buys, something like 75% of seaborne iron ore. And because demand in China has been really, really weak, that's exerted a lot of downward pressure on the cost of that raw material. We also, in coking coal, an important buyer of that material is India. They've had the elections this year, so a lot of buyers were holding off on purchases, adopting sort of a wait and see attitude because they didn't know what was going to happen, who was going to, the outcome of the election created a lot of uncertainty. And so that's caused that downward trend. At one point, these prices were getting, seriously low. So iron ore was reaching $90 per ton, and they've rebounded since September, largely because of a new stimulus package that's been released by China. And also in India, buying activity is kind of boomed a little bit because the monsoon season is over, which is traditionally a rainy period in the middle of the year. So we're seeing raw material prices coming back up a little bit. But yeah, the overall trend has been down for most of the year.
The other thing that we clearly look at from a raw materials perspective at MEPS is scrap. We keep really close eye on those markets. So what have we seen from that perspective?
Yeah, so one of the kind of the important benchmark prices that we closely look at is the Turkish import scrap price. The reason that we look at that is because Turkey is the biggest importer of ferrous scrap. And again, the trend has been really similar. Prices have come down for most of the year, largely because demand in Turkey for steel is pretty low. Most steel produced in Turkey is produced through the electric arc furnace route, which predominantly uses scrap metal as its input material. The other thing to take into consideration is that this kind of production method uses electricity, and electricity prices in Turkey have been relatively high. And so because the energy costs are going up, they're exerting downward pressure on scrap values. So yeah, again, across the broad spectrum of raw material costs, they've been going down this year.
Okay, so going forward, I expect people looking to buy steel will be keen to know what the outlook is and what effect that might have. So the raw materials outlook, what are we expecting in the coming months?
Sure. So in our latest forecast, one of the kind of our base case scenario is that raw material costs will remain, relatively steady. We are forecasting prices to go up, but we think primarily those increases will be driven by the effect of the interest rate cuts in many kind of economies. Sort of coming into 2025, we think demand will increase because there's an extra, the cost of borrowing will be lower, and that should stimulate demand. We also think that the effect of production cuts potentially in Europe and also in China, that they're producing a lot less steel, that those kind of supply side pressures might cause prices to go up. One of the big things that we're kind of analyzing now is the effect of Trump's election, the suggestion that he would impose tariffs on all goods coming into the US. When you look at raw material costs after the election result, they moved slightly, but the effect on raw material costs are kind of largely driven by what's happening in China, what's happening in Australia, because they're such important sources of that material. But there could be potential for tit for tat tariffs, and that could cause a divergence of trade flows. So the effects are really, really uncertain at the minute, but our base case at the minute is that raw materials are going to be relatively steady for the time being. Recently China's releasing, further stimulus into the economy, but it's going to take that time for that kind of flow through the system. So again, we saw stimulus measures being implemented early in the year, and they've yet to kind of really spur demand in China. And another thing to consider is that if Trump were to impose these tariffs, would that maybe spur China on to release even further stimulus, because it's a massive trade partner with the US. So huge tariffs on their goods are losing that kind of business with the US. Goods are going to flow into other countries, but again, the demand is going to have to be replaced by some other countries, basically. So again, we think that maybe that the Chinese government may introduce more stimulus that might be supportive of raw material prices, but our base case scenario is that relatively steady for the time being, and other factors will be affecting steel prices in the future.
Okay, great stuff. Lovely. Thanks again for joining us for another Marketing Minutes episode. It's been great to have you on. Really good insight. Thanks, Ewan.